Good morning, everybody. Happy Tuesday. Good to be here. We're going to get started here in just a minute. All right, you guys can see the proper screen. That's helpful. That's very good. All right, perfect. Let's get started. It's already 3 minutes past the top of the hour. Good morning, everybody. Set the Market morning call here. I'm Serge Berger from thesteadytrader.com. Let's get started. If you're here for the first time, please make sure you subscribe to our channel. And anyone here, please always give us a thumbs up like on the videos. That really helps us to be able to continue to do this morning call. We're going to spend the next 10 or so minutes going through my morning notes, and I'd like to start off in no particular order, but what we're going to start off with here today is stock. Actually, no, we'll start off with Bitcoin first because I think it gives us a good framework within which to measure risk. Then we're going to talk about the S&P 500, what to maybe expect here for the fourth quarter. We are going to be looking at gold, which is off again this morning. We talked about how overbought that was a little while ago. We're getting closer now, I think, to potentially a buy area. We'll see. Then I want to talk about layoffs that are happening and the fourth quarter rally in general. So that's kind of what the plan is. So let's start off with first things first. I'm going to have to look over here. I know the camera's here, so because my screen's over here. So first of all, what I'd like to do is just give a little bit of perspective. We talk about Bitcoin, not so much because this is about Bitcoin here, but because it's a good measure of risk appetite, basically liquidity. And so it is notable, I will say, that we see things like the Nasdaq 100, which seems to be sort of continuing its upside momentum. It's interesting to me that Bitcoin, which is higher octane, has not been able to rally with the Nasdaq 100. Now, there's a lot of reasons for that. There's a lot of passive flows going into the Nasdaq 100, but there is a risk here that the Nasdaq 100 ultimately fails this rally and ultimately mean reverts lower. So that's not meant to be some sort of a scare tactic on my part. I'm just observing something here that I think is rather interesting. Typically, when you have risk-on periods, whether it's coming out of the April lows or other periods, typically Bitcoin leads or at least participates equally. This time, we're seeing a notable divergence. And so maybe to highlight this a bit more in case people don't see this, Bitcoin is essentially now at the same level it was in July, right? So that's this, whereas the Nasdaq 100 is materially higher, right? So again, I'm just pouring this out, and I think what's interesting here is a couple things. First of all, momentum remains in the Nasdaq 100. So for those people that are using our momentum indicator, like the trender or the trend ruler, I'm going to just quickly point this out. So there's no reason to doubt the momentum from a directional perspective, right? So that's very clear. It's more the question is that I would like for people to think about is when is the momentum going to stall, right? Now we will know when the momentum turns in the other direction, because our momentum indicators will tell us. You can see we still have bullish momentum. So the momentum signal, the buy signal that we received in April remains intact. You can see that buy signal, it remains intact. We don't have a sell signal yet. So there's no doubt that remains the case. What I would like to put in people's heads, though, from a risk management perspective, is just the idea that, and I'm going to create a separate chart here because I have too many charts open, so give me just 1 second, is the idea that we're once again getting very extended from just a very simple sort of, I guess, channel perspective. So basically, once we came off the April lows, we've been we've been ever since kind of working higher within this channel. This is now the S&P 500. Now again, none of this means that it's time to short or get out or panic or anything like that. It just means that we might be at a situation now where the reward to risk is getting worse on the upside, even though momentum remains intact, right? So it's one thing, kind of being cautious. I remain very hedged in my trading book. I have been for 2 months now. That's one thing to observe that. It's a whole nother to fight the momentum, right? The thing is, momentum can change very quickly, and that's typically when people get in trouble. But nonetheless, the momentum remains. So if I combine this, the S&P being where it is right now, again, the upper end of that range, the past few times we got to that level, we ended up kind of pulling back, not too much, 3, 4, 5%, but it doesn't mean that we have to correct right away. That is also the case. That's why I'm saying momentum remains there. But if I combine this with this chart where the Nasdaq is totally decoupling from Bitcoin, I just have to be mindful that typically when this kind of diversion happens, unless Bitcoin were to catch up to the Nasdaq, which is possible, right? I think that's the less likely of the two outcomes. But again, we can't totally write that off high. That's why I want to continue to respect momentum. So hopefully that helps a little bit. At the same time, we see gold, and I'm adding gold here over on this chart as well, so you guys can see even gold has now sort of mean reverted, right? And there's a reason I'm going through this in this sequence. So gold is the green line. It probably should be yellow just to be a bit more clear. But even gold has now corrected. It's down another 2% this morning. Remember we made that call a few weeks ago. We said that gold's getting very overbought, and sure enough, it's pulled back materially since then. The reason I'm pointing this out is because the one asset class that is extremely retail investor focus, it's the Nasdaq 100, the blue line, the uncorrected line, right? So yes, Bitcoin too, but Bitcoin, I don't think retail investors can move Bitcoin a whole lot more at this point because of the price level where it is, and also it's become more institutional. So the fact that Bitcoin's not rallying, gold has pulled back, but the Nasdaq is going in one direction tells me that there's a lot of chart chasing and behavior taking place in stocks, which is the most retail asset class. And again, momentum remains there. So let me just say this for the third or fourth time. Momentum remains there. Now our indicator remain bullish momentum in the Nasdaq 100. It's just at some point it'll probably change, and then we have a problem. So that's just quickly to put this into some context. Now, the next question we have that I hear a lot of people talk about is the fourth quarter rally. I was just this morning at the gym, another gentleman approached me. He knows what I do, and I was the conversation was around sort of the all-time highs and fourth quarter rallies, and I told him that the most consensus of views and positioning right now is that we're going to see a fourth quarter rally, right? Now, that is possible. Keep in mind, though, we're already 1 month into the fourth quarter, okay? And it does not have to be linear. In other words, if we look at the performance so far in the fourth quarter, so in the first month now, basically, you'll notice that if you look at the S&P 500, which is on here somewhere, so the S&P is up, let's call it 3%, not quite, in the fourth quarter. The Nasdaq 100 is up about 4.6, 4.7%. Actually, it's almost 5% now because we're up another 30 basis points this morning. Why not, right? So the question is that not already a pretty decent quarter, right? So we have to ask ourselves, so people that are calling for a fourth quarter rally have been right so far, right? The question is, does it continue linearly into the end of the year? I don't have an answer. I'm skeptical. I think we'll get a pullback at least, but there is risk. And again, we'll use our indicators. They will guide us for this. Our momentum indicators will guide us, so I don't have to really make too much of an opinion here. They will tell us when that changes. So there is risk. I'm telling you, there is risk. It's not an impossibility. I'm going to assign this about a 30% chance that this fourth quarter rally completely stalls and then the machines start going the other direction. I'm not positioned that way. I'm simply hedged, right? But that is something that I think I'm saying this out loud here because I know a lot of people are not even taking that into consideration, that kind of scenario, right? So I've seen it happen before. It can happen. Doesn't mean it has to happen this year, but it's a possibility that I think one should not ignore. So that's Bitcoin, that's gold, that's S&P, that's this whole constellation. The other 2 points I want to make is if you look at the performance of sectors, so this is just the actual sectors month to date, or basically quarter to date now in this case as well, you can see technology is up 6% on the month, right? That's a good year sometimes, right? In 1 month. Like on a quarterly basis, that would be a fantastic rally. Now we're up in a month. And so it is possible, again, I assign about a 1/3 chance or a 30% chance to this being a front-loaded fourth quarter rally that will at some point just be done with. And then maybe we go sideways or lower for parts of November and December. I just don't think people should totally discount that because it is possible that that can happen. And that's going to make a lot of people look quite silly. So that's what I see as a possibility here. We also have a lot of funds and mutual fund stuff actually end the year at the end of October, so like basically by Friday, and so there's a lot of chart chasing happening into that. But after that, it might be over, maybe over, right? Again, I assign a 30% chance to that. The other thing I want to point out is, and this is now totally away from this chart stuff, and that has to do with layoffs. This is not probably going to matter today to the market because we're, again, that's more of a sort of an intermediate term thing. But just keep in mind, we're getting a lot more job cut news. UPS, you can see it on your screen, the Wall Street Journal reporting 48,000 job cuts are planned in operations and management. Amazon, 14,000, right? Another company, I was just saying Star, I don't know, it doesn't matter. That's a lot of jobs, right? So I just wanted to point this out. Again, this does not mean that we have to be bearish or short. It's just not, the kind of thing that's in and of itself bullish, right? So I just kind of thought I would point this out here for those people that care about these kind of things. Let's see here. Also, before we continue, and there's a few questions I want to address. In our educational series, this week we are talking about sector and group rotation. So Christian, my colleague Christian, put the link into the chat box here on YouTube just now. If you click on that link, then you'll get to this page here that I'm going to bring it up right now. Okay. You're going to get to this page and you can sign up for our free educational series this week where I'm going to teach you how we rotate through the market through the lens of sector and group rotation. We've had a great year so far. You can see the number there in terms of the individually closed positions. And it's just because we're able to rotate through trends. And, what I've noticed is a lot of people, when they start getting away from the constant chart chasing individual stocks and play the sector and rotation game, not only has it become less stressful and less hectic, but for a lot of people, it's easier to focus on sectors and groups and asset classes as opposed to individual stocks because they essentially dramatically reduce what's called idiosyncratic risk. So that's what I want to point out as well. So you can sign up for that, totally free. It's our educational series here this week talking about ETF, sector and group rotation. Last but not least, a question. Jeff is asking, can you explain the difference between GC? Oh, GC is the futures contract. So he's just wondering what's the difference between GC, so that's basically gold futures, right? And XAU USD. Well, this is spot. This is the spot price of gold, right? So like the cash price, if you will, not the futures price. So anyway, that's it, folks. I'll see those of you guys that are Market Rover members. We'll see you in just a few minutes over in our Market Rover session. Hopefully this was helpful today. Please give us a thumbs up, like, and subscribe to the channel. Also, I'm at a conference in Atlanta tomorrow and Thursday. So this is the last set the market for this week. We'll be back in the office come this following Monday. So we'll catch you then. Now we've got a lot of important news this week. As you know, between the Max 7 earnings late Wednesday, then we've got Trump-Xi meeting maybe Thursday. We've got the Fed on Wednesday. So there's a lot of stuff going on here that I think could give the market a bit of a jolt in either direction. So and again, it's the end of the month of October, where a lot of mutual funds and things close their books for the year. So it's only natural, I think, to see a bit of a chase here into this period. So we'll see where we go from here. Stay nimble, follow momentum, and again, please give us a thumbs up, and subscribe to the channel. And we'll see you guys soon. Thanks for being here.